Wednesday, May 7th, market analysis, Stan Ehrlich. Good morning. 9:57 California time. We start out with stock market indexes, go to the futures markets, and I've got 4 stocks to review. Indexes. We were overbought a few days ago within the number of allotable days to have a bearish engulfing end up being a ER sell signal, which would turn the price action, the daily charts, red, and be an official ER sell signal. We have almost got that. We simply need to make the low of the day a little bit lower. Then it will be below yesterday's low. We have already been higher, basically overnight, than yesterday's high. Failing to make any new highs for the trend and turning all the way down to make new lows for the session. At the moment, we have a little rally. And we're back up to about 2 1/3 points higher on the day, or 23 in E-mini language. So I am still looking for a gap to get closed down here at 53.40-ish at a minimum. And my opinion is that we are not going to stop there and that we're going to make an attempt to make a new low for the whole move below early April's lowest lows, where we got at the bottom, basically, almost the exact low day, on April 9th, a bullish engulfing ER buy signal, which worked out on the average very well. So now I think we're about to get a red sell signal. We need to get below yesterday's low in order for that to happen. So I'm hoping it does. Now, in the meantime, since the bullish engulfing bottom in early April, here we are basically early May, a month later, we have rallied substantially. We have gotten back up to approximately, it's a little different depending upon the index, resistance areas, price ranges, and starting to show some weakness. Monday, Tuesday, and today we're bouncing back at the moment. But again, I think we're not going to hold. Even if we don't have a bearish engulfing, I'm still looking for a high here, a top, and a turn down. Now, if you break today's lows, you'll be breaking yesterday's lows probably, and Thursday and Friday of last week. We're already below Monday. Let's look at the 1-minute chart here. And we've got a little rally. We overbought on a 1-minute basis. I use this for extreme short-term up and down swings, not necessarily for other tools, but I can do that too. So we just might be at a turning point right about now. Okay, let's look at the spider, regular SPY. It's a doji, inside day, a little bit higher. It almost closed a gap yesterday as it came down. Didn't quite do the job completely, but almost. I do expect it to get closed. I am looking for support areas to be tested, and that would be down into the 552, 548.5 area. And for further weakness, I should drag this over to the far right. Sorry about that. And that'll be about it. And also, there are gaps to close underneath the market here on most of these indexes. So to close the gap below the market, you've got to get down to about 528.5. And again, like I said on the E-mini, which is obviously in the same family, this is the Papa, the ES is the son, and the grandson would be the micro, so to speak. Now, father like son. So I'm not expecting the 508 to hold, and I do think that the lows that were made on the SPY on April 7th, a Monday, are also going to get broken. It may take a few weeks. It might happen a lot quicker than that. Remember, bear moves, technical downside corrections, and or bear markets, longer term trends, tend to go down much, much faster than bull markets go up. The old saying is bull markets climb a wall of worry, while bear markets panic, crash, super quick. All right, looking at the 1 minute chart on the spider, as you would expect, doji, inside day, sideways, but showing some signs of weakness, and I think there's going to be more. Now, what about the NASDAQ, QQQ? Well, NASDAQ, traditional QQQ ranges, also a doji, also partial gap closure yesterday, not complete, and also a large gap down below the market at around 448 or so. Needs to get closed. Well, should get closed, could get closed, usually will get closed. Because as I keep saying, gaps are like a black hole in space. They tend to suck the price action back into the gap area. Now, same thing here. I'm expecting 427.8, 428 to get tested. And the low on April 7th was in the QQQ, the exact low day for my bullish engulfing. And you know, I tell you that the market is turning up or down the day I see green or red. Now, they can happen after the YouTube, so I have to talk about it the next day. Usually, they're happening that day. Hopefully, I'm going to be right. Now, the QQQ 1 minute data, a little bounce here. I think it's going to stop and turn back down and make new lows. And in some cases, not the QQQ or the SPY, we're not going to have an outside down day because we never got higher than yesterday's high. Next, we do have the NASDAQ NQ futures contract. It did overnight get higher than yesterday's high. It is a candidate for a bearish engulfing red daily bar. All it has to do is get below yesterday's low, which is not particularly far away. Momentarily, we're a little higher on the day. Let's see what happens here. Here's the 1 minute chart. Got very, very overbought on this little pop rally. That's an indication to me that it's a prime target that slips some, maybe enough to cause that bearish engulfing. Let's look at the YM. It did not get higher than yesterday's high. It came super close. We have a high today of 41,334, while yesterday we had a high of 41,349. So very small difference, but not higher than yesterday's high. Now, we are very close to the high of the day right now. And in the next few minutes, we just might get higher than yesterday's high. In which case, then all we need to do is come down a lot and get lower than yesterday's low, which will be a bearish engulfing. But right now, it's a doji. And we're not quite there. You need to get right here, because that is yesterday's high early, which would have been yesterday, day before yesterday's afternoon. So close, but not quite yet. Also close to this morning's high. Super close, not quite yet. Okay, Russell, not higher than yesterday's high, I'm pretty sure. Today, 13, yesterday, 12. Oh, we are higher. Okay, the Russell got slightly higher than yesterday's high, but it unfortunately was not overbought a couple of days ago, so we're not going to have that bearish red sell signal. We could have an outside down day or a bearish engulfing. We don't need to go up any further. We did already get slightly above very early yesterday, the high of the previous day. Okay. So now we have to get down here below the low of yesterday in order to make the bearish engulfing. But again, not overbought, no red, no ER sell signal. Next, we've got also no overbought on the bonds or oversold. Bonds are rallying up to a little resistance at the moment. We're starting to get caught here between some resistance levels and support levels. So this could bounce around a bit. I wouldn't be surprised if it stopped moving up at the moment and I'm actually made some minor new lows for a week or two. I can't tell very well at the moment, so I really don't have too much to say other than it's, stopping at some resistance. I just keep an eye on this. 10-year notes are moving up above, a little bit above, a resistance area. I think that's drawn fairly accurately. A little sloppy, but not very super accurately defined in the first place. So we'll see what happens with 10-year notes. It could also be getting stuck here between resistance around 12 something up to 13, or down to 9 something. Okay, crude and the other energies. Higher high today, but lower quote at the moment than yesterday's close. Possible reversal. Oversold conditions a couple of days ago favor it moving up even more. Right now, it's a little lower on the day. I don't know. I think I'm going to have to go with the upside here, looking for a move up to 61.5 and maybe all the way up to about 64.5. So I'm friendly, not super bullish short term. Heating oil, pretty much the same thing. Minor new highs for a week or so, a little lower on the day at the moment. We were oversold. Support got tested, bounced off of it. I think there's a chance we could still get up to the resistance area here, and that would be about 211. Next, we have a slightly higher high today than yesterday with high natural gas. It's still staying higher on the day, and I think I have to say the same thing about natural gas. Let's go up to 4.03 or something, the resistance area, and see what happens next. So I'm friendly for a little bit more of a rally. Now, we made a higher high in gold than yesterday, but it's losing a lot of that strength and now lower on the day, back into the middle of yesterday at the moment, and we did get lower than that. We could have a bearish engulfing. It's not overbought within the allotted previous number of days, so we're not going to have a red bearish engulfing ER sell signal, but maybe a bearish engulfing. That would be bearish just because of the Japanese candlestick bearish engulfing. We'll see what happens here. I do think gold is probably going to dip down a little bit more. If it starts moving below 32.08, then my first objective, which has already been fulfilled a few days ago, is obviously broken. And then we're probably going to go down to about 3,000. Silver also couldn't hold its strength, closer to yesterday's low, might have a bearish engulfing. Let's see, 33.48. Yep, we did get slightly higher than yesterday's high by a very small amount, but higher. And we're close to yesterday's lows. So a bearish engulfing could happen. That's exactly what happened on the top day. Unfortunately, it wasn't overbought, so I didn't get red. I think we're getting caught here between a rock and a hard spot. Support is 31 to 30.50. Resistance, it seems to be stopping at, is 33.50 down to 32.50. So let's get below 32.50 and then below 31.80 and then challenge 31. Next, platinum. Slightly higher high today than yesterday, not making a new high for the move up. A little reversal, so to speak, in progress. And there's a chance we could dribble off to about 950. I can't come to any great conclusion here. I love the fact that we had a buy signal almost on the exact low day, and it worked out great. Plus 2 days later, he had another one. So that's all come and gone. That rally is not necessarily finished, but it certainly is well on its way, and lots of elbow room to lock in profits if you're not crazy. Of course, some people don't do that. Very bad trading style. Next, high-grade copper, bearish engulfing today. Not overbought, so it's not turning red. That tells me copper's probably going to slip some. I would not be a damn bit surprised if we didn't go back down to 4.57. That should be relatively easy. and breaking the minor low here a week or so ago at 452-ish, and then test 440, 4.46 and 4.43, little support area down here looks quite likely. So that's my expectation, and maybe even lower than that. Now, grains. Beans are around unchanged with a higher high than yesterday's high, but we're not getting any follow through at the moment. I'm hoping, and you don't want to trade on hopium, that these last few lows hold. If they don't, I can still justify a long-term potential bottom, even if the market dribbles off to as close to maybe 1010. But as it gets closer and closer to the low that we made on April 7th, I get more and more concerned that this long-term bottom pattern, which is still pretty good, is failing. So anything below 1036 is putting a little question mark in my mind, but I'm still bullish. But let's say if you get below 1,000, that's going to be a serious problem. So I don't expect that to happen. But maybe a little bit more of a dip and then up. Or we just start moving up right away. What about soybean oil? We have a bearish engulfing on soybean oil. That implies it's going to work its way a little lower. So I have to go with that for the moment. We might dribble off to, say, 45.5-ish. Wouldn't be too surprised. That does not kill the long-term bottom. But the lower you go, the more problems you've got about justifying that's double shoulder, head and shoulder bottom. Let me rescale here. So first shoulder low way over here, second shoulder, head of the formation. We've got a bullish engulfing at the bottom of the first inside shoulder out of two shoulders, and we have another bullish engulfing on the second shoulder. Great. Both of them work fairly well. This one had some trouble, so I have to say, honestly, it made a lower low than the low of the signals, so that failed. But my comments many, many times of the 630 or so recordings I've made, my bullish or bearish ER signals are sometimes part of the topping or bottoming out process and not necessarily, although frequently, the exact high or low day. There's the exact high day and a whopper of a crash. The exact high, well, close. That's the exact high day and a 1 or 2 or 3 day dip. Not that big a deal. Okay, so soybean oil looks like it's going to have a little trouble for a small period of time, a few days, maybe a week. I'm not looking for much lower, and I have to still maintain my long-term bullish pattern expectations. So I'm looking for a low to provide some evidence that the market's turning up. What about soybean meal? Like wheat, on the average, I'm not getting any signals it's changing this long-term bear market look. We have lower highs. We have lower lows. Month after quarter, after 6 month time, after year. That's the definition of a bear trend. Lower highs and lower lows over time. And that's exactly what we've got. I really need to see a close above $3 to get slightly excited. 300, I should say. And very much optimistic if we start to get over 310. That will improve the look of things a lot. Corn. Testing the lows of the previous shoulder as we speak. This is now possible triple bottom, which are very rare, so I'm not thinking that's going to happen. I have to tell you, because of the outside down day, we could slip off a bit more and make slightly lower lows. Now this begins to throw timing off, and I'm going to double check that right now. The distance time-wise from the first shoulder to the head of the formation is that number of, and I'll just get fairly parallel here, that amount of time. Number of days doesn't count. It's the amount of time. Of course, you can translate that in a number of days. So this was the idealistic point in time, that first low right there. Perfect almost. But we had a double bottom with a buy signal, a second low. So I'm saying, okay, the shoulder's got a double shoulder, double head. Bottom, damn it. Double bottom, sorry. And it broke out and it started to go up, but overbought conditions turned it all the way down to where we are now. There is one other comment. We are oversold and we have a bearish engulfing and oversold conditions. That sometimes leads to what I call a bass-backwards reversal. It doesn't look like it's bullish, but I've seen too many of these oversold conditions with an outside down day, open higher, and go straight up. That would be really cool. It would create a triple bottom, which again is very rare, so I can't really expect it. Let's see. Now we got wheat. We still have the lowest low on April 30th when I squawked about a possible bottom of substantial amount of time period, maybe months and months to come. Well, we have a higher high today than yesterday, and it's up just a little bit on the day at the moment, just nothing to speak of. I just need the market to start to rally. I want the first sign of bullishness to be over 548, close over 548. Then I get very excited if it gets over 571. In the meantime, sideways is not bad, but it's not good. Going down more will kill my opinion at the moment that this was, of course, the long-term bottom on April 30th. So I have to be patient here to see if that works out or not. First indication, I would want to consider long positions on a long-term bull basis would be, again, a close over 540, let's call it 550 to be safe, or a little safer, 550. Next, cattle. Overbought, seems to have topped out, dropping off fairly sharply today. What's my first downside objective on a correction? Back down to about 207.90, 208 would be fine. If that doesn't hold, then I'm going to be looking for something way down in the ballpark of 194, 196. Test that trend line at 196-ish. So I'm trying to turn bearish here. Not quite convinced of it yet, but we're looking better than yesterday, that's for sure. But I did allude to this yesterday. Now, hogs have made a minor new low, but that's a new low since March 6th, 2 months ago. Fairly interesting. We're not staying there at the moment. If I really want to get bearish immediately, I'd say that the close below yesterday's low was going to do the trick, which it would for me. But I don't like these situations where it makes a new low for a few weeks or a couple of months or longer, and then pops back up into the same trading range we were in before, which is what's happening at this moment. We did get a little bit below some support, but we haven't closed underneath the support, and that includes now the current quote. So staying here or a little higher would actually look slightly friendly. There is a little gap to close up here, and the possibility of it bouncing back up to 101, let's call it 101. So I'm really not very sure. I need another day. Next, Shell closed its gap yesterday on the rally, turned down immediately. So if you sold when the gap was closed, good for you. We're coming back up a little bit at the moment. If you did sell when the gap was closed, don't let a profitable trade turn to a loss. Lock in some sort of profit. That's one of my golden rules. There's a lot of nuances involved in that, but generally speaking, not good. Don't let a profitable trade turn to a losing trade. So Shell, maybe a little lower. There's a gap to close down here, 63.44. Looking for that to get closed. Next, we did close, and very accurately. Wow. On Apple, the gap I've been talking about for several days now. If we hit a low today of 193.80, that would close the gap. Today's low is 193.25. Damn close. And it's trading at 195.5. So again, if you bought when the gap was closed, you'd be looking okay. Not much of a profit, but a little bit of a profit. And if we're going to bounce off that gap closure, we need to get stronger a little bit quicker here. There is a gap to close up here, 209. Why not? Next, Tesla. Very soft, very slow day yesterday and almost the same price range today. Not too much to add. There is a little gap to close down here at about 243-ish. I think that's in the cards. I think it's going to close that gap. Yeah, I don't like this line there anymore. That doesn't help me. So looking for a little bit more of a dip here. Now, Carvana. Yes, there is a gap up here at about 280. And there's definitely a possibility or even a probability that'll get closed. One problem at the moment is that we are not closing any of it. We're getting back up to the resistance, the bottom of the gap, the last few days, or very close. And it's right about the time for the last high. So a new little pop-up for a slightly higher high up to 260, let's call it 265 plus would be fantastic, and then turn down. Or maybe it would pop up enough to close part of the gap, or maybe even all of the gap, which would be a little more than I expect at the moment, then turn down. But it should do it if it's going to do it in the next couple of 3, 4, 5 days or something. In about 1 or 2 days, we're at the idealistic point in time for the last shoulder high to occur based on the first shoulder on the left, November 25, the top of the market with a bearish ER sell signal on the exact high day. And the next day, bam, straight down, straight down, straight down for 3 days in a row. After that sell signal, a whopper. By the way, that created a downside breakaway gap that we're now toying with the idea of it getting closed. There are 4 types of gaps: breakaway and exhaustion, a midway gap, which is pretty common and very difficult to discern at the time that it happens, and a gap that we really can't put in any of the other 3 categories, and it's called a common gap. But the rule is no matter what kind of gap, they're usually closed. I keep saying usually. The one gap that's more often not closed is the breakaway gap, which is what we had back on February 20th, as it moved down sharply from the high day with a bearish ER sell signal. So we'll see if it can close this or not, and if it turns down and creates a last shoulder high or not. But this is pretty significant. What's my downside? Okay, my downside objective on this damn thing is way down here. Oh my God. I find that hard to believe. $5? $6? That's it. That's what it says. Now, you know, Carvana was trading at $26 only a year and a half ago. Can't help it. That's what the charts say. Next, we're going to go back to the E-mini for a second. And we did stop on the rally about when I said. Came down some, pop back up a little. Let's see if we can keep it coming down a little bit more. You guys have a great day and profitable trading to you.